What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. We have a lot to cover in this video, such as this Netflix situation where they are going to be releasing their movies in theaters for an exclusive 45-day theatrical window. We have potentially no shares left to borrow on AMC, as reported on Stonko Tracker. We have over 300% cost to borrow max on GameStop. We have the cost to borrow stepping up on AMC too, and we have Citadel liquidating their AMC position. So we have a boatload of things to cover. We're also going to cover a little bit of the technicals that we have seen today. But before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you guys have seen the success that people have been having with the 1348 trading strategy. We have another proprietary trading algorithm coming out very soon. If you do want access to all the over 40 private live streams every single month, the 850 stocks alerted, make sure you check out that link down below. So AMC right now closed the day at $12.90, up 10.16% on the day. Remember what we have been saying. If the overall market gives us a little bit of runway to start trending up, then that is most likely what we are going to do. Now, taking a look at a little bit of the longer time frame on AMC right now, specifically the 4-hour, because this is what I'm going to personally use to let myself know when I want to start buying AMC calls, and that's going to be when this blue line, the 13 EMA, crosses over the 48 right here, and we get some closing candles above this 200 EMA right here. But we got a candle above the 48 EMA right here, which again, like from the video last night, that could be signs of a little bit of a reversal in the price action going over the next week or so. Now, again, we are most likely going to be getting some more fear coming into the next rate hike, in that next level of fear, whether or not the Fed is actually going to be able to handle all of the inflation that they have created over the last 2 years. Now, when we come over to Netflix right here, Netflix reportedly plans to keep some movies in theaters for longer before streaming, including its upcoming Knives Out sequel. Now, this is going to be a 45-day exclusive theatrical window, as you can see right here. What does this tell us? One, Netflix, a giant streaming company, is struggling. If even they see the success of releasing and the potential of them releasing their movies directly in theaters before they come onto the streaming platform, what does that mean? The movie theater industry is not dead, no matter what Rich Greenfield, Charlie Gasparino, or what any of these other silly analysts have to say from mainstream media. Now, when we come over to Stonko Tracker right here, again, we are seeing on AMC right here, 0 shares left to borrow. Now, we did see, as we're going to take a look at, an increase in the cost to borrow for AMC today. A little bit on the maximum side and a little bit on the average side as well. But again, Stonko Tracker is only getting their data from one broker, one data source, whereas Ortex is getting their data from about 85% of the total market. But when we come over to Ortex here, they've been at 100% utilization for a while. But as we can see here, we are sitting at 21.78% estimated short interest on AMC currently. We had a 3.55% average cost to borrow today, 5.1% max, with an additional 3.97 million shares borrowed, net borrow of 2.42 million. It's entirely possible by the end of the week that we're going to see these shares on loan over 160 million, and that the cost to borrow is going to start skyrocketing, very similarly to what we're seeing on GME over here with this average cost to borrow of 13.21% and the maximum cost to borrow at 301%. You'd have to be absolutely out of your mind to take out shares on loan against GME to sell them short at anywhere near 300%. And with the short interest rate here at 24.5% at these very inflated levels, again, it's not the smartest thing that they could be doing at the current time. Now, let's talk a little bit about this situation going on with Citadel, some other institutional purchase changes that we have seen over the last couple of days, because 13F season, basically the time period in which these institutions have to file these reports showing what they have bought and sold in the previous quarter, has come to a close. So when we come over here and take a look at Fintel, this is going to be Citadel Advisors for AMC right here, and they have sold 45% of their AMC position again, and now they are only holding about 88,000 shares. Now, I saw a lot of people starting to kind of circulate around on the internet that Citadel was buying calls. It must mean they're trying to switch to being bullish on AMC. Well, right now, they increased their call position by about 41% and their put position by about 31%. Now, so essentially what they're looking at here is they're playing it both ways, a little bit more geared towards the call side, the bullish side, as we can see right here. But again, Citadel does not have 9.9 million call contracts. The call contracts that they have control 9.9 million shares because each options contract controls 100 shares. Now, in addition to this, the other thing that I want to bring up here is that when we look at these 13F filings, specifically when we talk about organizations such as Citadel, we are never, ever going to see what these institutions are short on. If you look in the SEC's frequently asked questions surrounding 13F reporting, they directly tell institutions to not report short positions. So it is very, very, very difficult and relatively impossible to see which institutions are short which individual stock unless the institution themselves actually comes out and tells us. Now, when we come over here and take a look at Goldman Sachs as well, we can see that they increased their put position by about 40%, but they increased their share position by a decent amount, about 36% right here. Now, the last thing that I kind of want to talk about before we wrap up this update is kind of what we have to look at going into the end of this week, specifically surrounding the options chain for AMC and Max Payne. So when we come over to this website right here, we can see AMC Entertainment, last updated May 17th. And the Max Payne for AMC right now is $15 a share. For those of you guys that still are a little bit confused on this, Max Payne is the price where the most amount of puts and calls are expiring worthless on expiration. So it's benefiting option sellers, people who are selling options or shorting options, if you want to be more technical. And it is hurting options buyers. Most of the time, the options buyers are going to be these retail investors, such as ourselves. And the option sellers are going to be large institutions with a focus on options trading or market makers. So when we're trading at $12.90, there's been a lot of theories about Max Payne in the past. It's possible that if the market continues up tomorrow, we see another solid day on AMC. But if the price ends up going to $15 a share, and that's where the Max Payne stays throughout the end of the week, and that's where it finishes, that is going to benefit market makers such as Citadel Securities the most. Now, when we take a look at the actual options chain for AMC, when we come over here, it is a monthly options expiration period, which is going to lead to slightly more volume and open interest. So it does lead to the potential for somewhat of a gamma squeeze where when these market makers are selling a lot of these options into the open market to mostly retail investors, they're going to have to hedge these positions, which results most of the time in them buying shares unless they are selling puts, which we have been over many, many times in the past. But some of the key levels that I kind of want you guys to take a look at here is there was a lot of action and a lot of volume at this $13 strike that expires on Friday. 23,000 contracts were traded. Yet we are seeing a decent amount of open interest at 17,000 contracts. And as we go out a little bit further, again, all the way down, we're going to see these furthest out of the money strikes have a lot of open interest. But it is a good thing to see that the volume on some of these is a lot lower. Yeah, the $60 strike has a decent amount of volume on this today. And we remember, we've gone over this many times, these at-the-money, in-the-money options are the key to big price movements to the upside. But again, in my opinion right now, I've shown you guys this 4-hour chart right here. We've gone back and shown you guys this example of the last time that we ran. I'm personally not buying calls yet. You guys know the qualifications and the requirements that I need to see in order to do this. So let's see when we can get there. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys tomorrow morning on the live stream at 8:15 a.m. Eastern.